Today we are going to be talking about multi-entity and consolidations and how Intacct really makes those things user-friendly. It really gives you a lot of power with your system and flexibility with multi-entity accounting and consolidations. Our lines are all muted today during the broadcast, so if you have any questions, please feel free to put those in the question or chat pane on the GoToWebinar, and we'll be monitoring those and answer those as we go. So with that, we will get started. I do have just a couple of brief slides that we'll go through, and then we'll jump over into Intacct and actually show you the product. So we will get started here. So again, we're going to be talking about simplifying multi-entity management and consolidations today. So a couple of the key benefits of Sage Intacct, just from a functional perspective, it's very user-friendly. It's got dimensionality, which we talked about on our last webinar a couple weeks ago. And then today we're going to focus on the multi-entity aspect of Intacct, which allows us to share data across our entities or our companies. We can provide consolidated or entity level reporting, and then easy addition of new entities, so that flexibility. And then we'll also be talking about how with that multi-entity we have automated inter-entity transactions, IETs, and how those journal entries can be automated to do balancing between companies or entities. And as just a reminder, in Intacct, all modules support auto inter-entity balancing, so you don't have to worry about some of the modules having to manually create those balancing entries. All of the modules in Intacct support that inter-entity functionality. So a few of the benefits of multi-entity accounting in Intacct: low overhead maintenance, so you're able to easily add new entities as your business grows or changes. You don't have a lot of overhead maintenance and setup when that happens, so you can just easily and quickly go in and create new entities in your environment and add those to reports. And so you don't have a lot of time and effort when you need to make those changes. Your master data is shared across all entities. So what that allows you to do is, again, share things like your vendors and your customer list across those different entities and companies, which just goes to further making it easier when you add a new company or entity in your environment. You don't have to go in and create another full vendor list or do a lot of maintenance. Throughout the system, on your reports and dashboards, you can easily filter on those so that you can see your financial data at a single entity level, a group of entities, or all entities combined. So you can create groups that allow you to see your data in different formats, so you can kind of slice and dice that and see different combinations of your companies to really give you the data that you need. Your transactions can cross between entities, so if you have expenses that need to be allocated out across companies, you can set those up. And then the system will automatically balance those entries for you using predefined due to from GL accounts. And then when you have the additional aspect of consolidations set up, if it's more than just combining those companies, it's true consolidations where you need to eliminate any intercompany transactions or balances. You can set up the consolidation module with automated elimination entries that happen during that consolidation process. So Intacct is really adding that functionality in there to try to automate as much as possible to really make your accounting close cycle much easier and the overhead and maintenance on the system much easier. Okay, with that, I'm going to jump over here into Intacct and show you some of that functionality that we have in the system. So again, as we're working in the system, you'll notice that I'm here at top level. So you'll see that where I stay at that level, I'm not having to log into separate companies like you have to do in your Sage 100 or Sage 500. So we're going to stay at top level. In this particular demo company, each of these entities are 100, 200, 300, etc. are all my legal entities or my companies. So this would be the equivalent of your different companies in your current system. So you can see in here I've got 7 companies, but I'm going to stay at top level as I transact in the system. So what that means is when I go in and I set up vendors, for example, under my accounts payable, I have my vendor list here. And that vendor list is now shared across all of those companies. So if I need to go in and enter an accounts payable bill for expenses to any one of those companies or any combination of those companies, I'm able to do so. And I don't have to set that vendor up 7 times so that it's in each of those companies. I set it up one time and I'm able to share that and use that across all of my companies. So when I go in and enter a bill, an AP bill, I'm just going to choose one of my vendors here. Choose one of my vendors here. And put in my invoice number, so just some standard functionality here. I've already got something with that number. And then what you'll see is when you get to your coding for your expenses on the AP bill, I've got my GL account here. I'm going to put in my amount. And then in this field, in this case, I've got it labeled as a location field. I'm going to have my different companies. So if I look at that drop-down list, I'll see all of my companies. So I can put in this expense, and I can actually have it allocated out and charge that expense out to all of my companies when I enter that bill in. So I don't have to go in to each company and put their portion of the bill in. I can actually expense that out at the time that I'm entering it and charge that out to each of the company's expenses. The system will then go in and it will create an AP payable balance on each of those companies. And then when I go in and actually pay that bill, depending on which company I pay that bill out of, it may or may not create a due to from between that company and the companies that the expense is sitting in. If each of these companies, 100, 200, 300, 400, they all have their own bank account, and you want to pay their portion of the bill out of their bank account, you can do that. So I can pay out of my Texas company bank account their $100 for that portion of the expense, and then it's not going to create a due to from balance because they paid just their portion of the expense. If, however, in my Texas company, they pay the entire $400 bill, then each of these other companies will create a due to from balance automatically between the company, their company code and company 100 that paid that bill. So it's going to do all of that balancing for you based on who pays the bill. So again, each company can pay their portion of the bill and it not create any due to from. But if one company, if you've got maybe a kind of an overhead or a pay company that does handle all of the payables, that company can pay all of the bills, and then each of the other companies will get their portion of the expense, but then have a due to from balance for that bill on their balance sheet. Okay. Likewise, when I go in and enter a journal entry, I can also cross between my expenses or my balance sheet, any of my GL accounts, so I can put in, excuse me, my different companies. When I do a journal entry, it's going to ask me my source company. So it's going to use this company as my balancing company. So it's going to go to the setup on this particular company and look to see what GL accounts I've predefined to use for my due to from. So I'm just going to put in some marketing expense here. I'm going to put some here to my Texas location. So I'm going to give them $100 of expense for marketing. Let's see, let's give my New Mexico company some expense, and we'll just keep adding a couple lines here so you can see how this is going to work. And we'll do one more here. And then I'm going to put this in some prepaid, and we'll put the whole credit in my Texas 100 company here, my prepaid account. So I'm going to go ahead and submit this entry for posting. And if I go back now and view that journal entry that it just created, you'll see that it's added this section at the bottom, which is my inner entity entries, which is my balancing. So it's gone out to my company 100 and looked at my definition for which GL accounts to use for my due to from. So in my company 200, I now have a credit of $100 and my original debit. So my company 200 is now fully balanced. And likewise in company 300, here's my credit. Company 400, here's my credit in my due to GL account. So now each of my companies is fully balanced, and it's doing that offset due from account in my company 100. So everything is balanced by company, and it's balancing it through that predefined due to from GL account that I've set up. So again, all of the modules support those inter-entity transactions. So whether you're in accounts payable, accounts receivable, cash management, order entry, any module that you're using in Intacct does support those inter-entity transactions. So if you cross over between companies, it will go and look at that balancing. To set that up, when you define your multiple companies, you go to your inter-entity mapping and you define what GL accounts are used. So when I have a relationship between company 100 and company 200, these are the GL accounts that I've predefined that it's going to use. So this is the table that it comes to look at to find out which GL accounts it should use when it creates those balancing entries for us. Okay. And then in your reports and dashboards throughout the system, it's got the ability to do reporting by your different entities. This is something that we cover in some of our reporting webinars, but just as a quick little reminder here, we've got this functionality in our reporting to do automatic expand by. So you can see I've written one column on this report here for my actual data. That's all I've got in here, but I set it to automatically expand by my companies. So then when I go and preview that data, it's created a column for each of my companies here. So what that means is, again, when I have a new company that I need to add into the system, there's low overhead maintenance. I don't have to come in here and update this report. I just simply go in and create my new company. And then when I transact in that, it'll be available to be used in the system. So just to kind of show you the ease of setting that up, I'm going to go into my company and I'm going to add a new entity here. And I'm just going to add entity 800 and we'll just call it our webinar entity, put in my tax ID here. And I can fill in, of course, any of this other information, calendar, start dates, any of that. In this case, I'm just going to leave all of that blank for now, just to show you how easy it is to add that. So I've got now that company. If it needs to have intercompany relationships, I would go to my inter-entity mapping and update that. I'm going to just kind of keep this real simple here, though, and not set that up. I'm going to come in and I'm going to show you entering a journal entry here. So we're going to make this our entity 800 journal entry to show you that. And let's go put some marketing expenses out here so you can see it's available for me to use immediately. Didn't have to do anything special to get that set up. Add some big dollars in there so we can easily see that. And let's do some, what's another, we'll just offset this to our travel so we can see some different lines on our report. So I'm going to submit that journal entry and create that. So now if I go back to my report and my profit and loss by entity, and I'm just going to run that report here. And you can see now it's automatically added this additional column in here for my webinar company that I just created with that marketing expense. So that quickly, just in a matter of minutes, I was able to add a new company in the system that's fully available to be used in accounts payable, journal entries, created a journal entry, and then it's automatically added to my report. So again, very low overhead when you have to change or add new companies as your business grows or changes. Okay. So then the last thing I want to show you is talk about consolidations in the system. So there is a consolidation module. With any of the reports, if your reporting needs are really just a combination of reports, you don't have to have the consolidation module. This reporting at top level, and just like I showed you on this profit and loss by entity, is showing you all of those companies combined and that total for those. So you don't have to have anything additional to be able to get that combined reporting. However, if you want to, if you have a need for elimination entries to do your consolidations, that does require the consolidation module in order to be able to have that automated. So in the consolidations, you set up a consolidation book, and in that book, you're going to define which companies are part of your consolidation. So that can be any combination of your companies that you have in the system. So it doesn't have to necessarily be all of them. It can just be whatever companies are applicable and that you need to include in the consolidations. And you can have multiple books. So if you have different consolidations and roll-ups that you need to have in the system for reporting purposes, you can include multiple books in the system. And then we do create an entity or a company here for the eliminations so that those are kind of standalone in a separate company. That allows you to be able to report with or without those. So you can still get your original data, but those elimination entries will be housed in a separate company so that when you do your consolidated reporting, it picks those up and does those eliminations for you. And then we define which GL accounts need to be eliminated. So in this particular case, we have all of our due to from GL accounts as part of that elimination. So when we run consolidations, it's going to automatically create those elimination entries for those different entities and those different GL accounts that we've defined. And then we just go in and run the consolidations for our different time periods. You can see I've actually already run consolidations all the way up through September in here for these particular entities. And then that allows us to go in and run different reports. So we have our some aging reports, a GL, a trial balance. We can set any of our financial reports that we create to run on this consolidated book. So I'm just going to run that particular trial balance report, and let's run it through September since we know that's been consolidated. And I'm going to include my eliminations book so that I can actually see that eliminated balance. And then when I look at that, I didn't run something correctly, then I should see my total eliminated, my total trial balance with eliminations in there. So, actually, I don't think I have all of my companies set up to eliminate, so that's why I still had some due to from balances. But that consolidation module just lets you automate those elimination entries. Again, not everybody needs those. Sometimes it's just a combined look at your financials where you're just adding the two together or the multiple companies together. And in that case, you don't need that additional consolidation module. So as kind of a recap here, keeping in mind, our entities are different companies with the automated inter-entity transactions that allows us to stay in one place. I didn't have to log in and out of different companies. I can go in and transact and post any of my transactions to any of the companies. I can cross between companies and the system will do that automated balancing for me. And then I can report and I can run any of my dashboards at a consolidated or entity level. So I will see in this particular dashboard right now, if I clear that, that's going to show up for all of my companies, all locations, but I can filter on that and drop down and select just my Texas company and apply that, and then it's going to update all of my reports and performance indicators, charts, graphs, everything on this dashboard for that particular company. So very easy to get your company level data. You can also, again, create groups of those companies. So if I said I wanted to see my operating entities, and I believe I've got 3 entities set up in that one, then I can just see that group of entities. So, and that one's got my entity 100, 200, and 300 in there. So very easy for you to add entities or companies as your business grows or changes. There's not, again, a lot of overhead maintenance. If you acquire a company and you need to bring that into your system, you don't have to go in and set up, all new vendors, customers, any of those things. Everything throughout the system is shared across all of your companies, which just gives you the ability to adapt and change as your business changes. Without a lot of maintenance and overhead. And likewise on your reports, we try to build those out using that functionality to automatically expand columns or run reports by individual locations, so that when you run those reports, you don't have to go in and do a lot of maintenance to add new companies to the report. It's going to automatically pick those up and just give you that data as well. So we really try to leverage all of the functionality that Intacct offers to make your jobs much easier and really get away from all of that maintenance that you're having to do now, where with adding a new company, you've got to go in and create that company code and that company environment in your Sage 100 or your Sage 500, which means you've got to go do all the setup options for that company. You've got to go in and set up your chart of accounts and activate all of the accounts that you want to be able to use. Your vendors, all of that has to be set up by company. And in Intacct, we step away from that and do all of that at our shared top level, so that when we need to add new companies, it's just an easy, quick add that takes just a couple of minutes to do.